My name is Soumya Sarkar और आप देख रहे हैं Wealth Redefine blog. In today's blog, we will be talking about debt funds in 2022. So a lot of people are excited to know about how 2022 is going to happen, what will be the impact on the equity market and debt market, and how the things will going to perform. First, let me take the debt funds, and then in next episode we will be talking about the equity funds. So, if you see the inflation graph in recent time, you see that all over the globe the inflations have gone up. Inflation have gone up due to COVID reasons. At the COVID time, to boost the economy, every central banks all over the globe has reduced the interest rate. And they put a lot of money into the system so that the purchasing power of people doesn't go away. A lot of people lost the job in between, and a lot of people lost their business as well. Due to this thing, the government of all across the globe, as well as the central banks, printed the note enormously and they put it in the system. So when a lot of money come to the people, suddenly they try to spend it. Once they try to spend it, it actually increases the demand. Once the increases the demand happen, obviously the price goes up. So this is the inflation. There are two kinds of inflation happen. One is demand side inflation, one is supply side inflation, but it is both of the side happened. So in a nutshell, the inflation has gone up all over the globe, drastically high. US is facing 40 years of highest inflation rate. And obviously this inflation cannot continue. So central banks all over the globe, especially US, has indicated that they are going to increase the rate. So what happened when bond price or interest rate goes up? When interest rate goes up, the bond prices is trying to fall. Why? Because if I am holding a bond of 9%, which is maturing on 3 years down the line, but if I get a bond of 10%, then obviously I would like to shun the bond of 9% and move into the bond of 10%. In this time, from moving from 9% to 10%, obviously I need to sell the bond of 9% and purchase the bond of 10%. So when I'm going to sell the bond of 9%, the person who is buying it will not buy at a premium rate, rather he will buy at a discount rate, because he's only going to get 9% in next 3 years, while market can give him 10%. So there is a drastic fall happens in the bond prices. That is the reason we may see that debts all over the globe may underperform at this point of time. Underperform means that the long-term debts, which have a more of a gilt or long duration fund, may start underperforming due to this rate hikes. US has indicated that it may go up to 3 rate hikes. So that means this huge amount of money is going to invested in the US Treasury, and that is one of the reasons that overall the bond prices all over the globe will come down. Now India has also indicated that it may go for a rate hike because of inflation, but in Indian case I do not see that 2022 will have a major inflation pressure. RBI still was on accommodative mode, so that means they might go for if they not go for a rate cut, they at least go into a status quo position, and they may not go for an aggressive rate hikes. So it means that Indian bond market may perform in a better way than the global bond market. But obviously the long-term debt, the medium-term debt will start underperforming. So investors should look into the short-term debts, low duration funds, or ultra short funds or credit risk fund to park their money for a short to medium term durations. So we may see that some parts of Indian bond market may not do well, but some parts may do well. And mostly the bonds which are of the lesser duration may start doing well. If you have planned to put the money for short duration fund into a bond fund or a debt fund, I would recommend you to talk to your investment advisor, understand your goal-based planning, and then invest into this thing. This video is mostly of a educational purpose, not a recommendation where to put the money. Before putting the money, I would strongly recommend to consult your investment advisor based on your time duration, expected return and credit quality of the bond. Thank you very much for watching the video. We'll come up with this kind of videos on a regular basis. We will discuss about different aspects of economy, funds as well as personal finance and other categories. If you like the video, you may subscribe to the channel, you may share, you may click on the like button, or you can send us the queries regarding this. Thank you for watching it. Namaskar.